So hello everyone, I want to show you what is a liquidity void and how do you know a liquidity void. Now if you want to use a definition, actually a liquidity void is the impulse move. Let me move that for you, so sorry. A liquidity void is the impulse move or direction either from the buyers or the sellers. It is an accumulation of fair value gap. I've done a fair value gap video on one of the videos that I did, and I explained what a fair value gap is in one direction in which the market always come back to fill. You can either be a buyer's direction whereby a lot of fair value gaps are being created. That is an impulse move of either from the buyers or the sellers, and market always come back to fill it. Now it is usually called the void in price action. I gave a picture here of an example where there was a change of character. You can see the liquidity void in this direction. So market always come back to fill the liquidity void. It's a must for market to come back and fill the liquidity void. Don't forget again, it is the impulse move of direction either from the buyers or the sellers. Now the type error, buyers or the sellers. Just no definition. It's a very straightforward topic. This is my channel. I did a video here on fair value gap. You can go take a tap on it and watch it and know how to mark your fair value gap. It's actually used for the institutional reference point. It can help you in your trading on how to analyze from the top analysis from the higher time frame to the lower time frame. And don't forget to subscribe on my channel. You will gain value of what I'm giving out as a content to you guys to learn more about. Now on the chart here, I marked one here, which is a fair value gap, and you can see market has come in here to fill up the fair value gap. This is a fair value gap. Fair value gap, market came and filled up. They are all fair value gaps. Market must always come down to fill it up. Market must always come down to fill it up. Now if you see in this direction here, we have a break of structure here. Can you see it? Or I won't call it a break of structure there. If you open your eyes very well, you will see the shift of structure took place in this direction. Can you see it? Now we have what? We have a fair value gap, and we also have fair value gaps here, which is also here. This will just help you to know how to analyze it. This is a liquidity void, an impulse move from the buyer side. You can see it. There was no sell candle, buy candle, sell candle, nothing like this. You can see here there's nothing to fill up here. Can you see this direction? Everything is balanced. You can see it here, right? But you can see here nothing happened here. This is an impulse move, and when you press play, you see market always come back to fill it up. Market always comes back to fill it up. Anytime you see an impulse move in a fair value gap, go around your chart and practice it. Look for impulse move. Impulse move. Can you see the impulse move? Impulse move, and what happened? Market came and did what? Market came and filled it up. You can see it. Market came here and what? Market filled all the liquidity void. Sorry. You can see here again, there was an impulse move. Can you see it? I'm giving you examples so it can be easy for you. Fair value gap, fair value gap, fair value gap in here. You can see these are all fair value gaps. And what happened? Market came what? In here and filled it up. So liquidity, anytime you say liquidity void, market always comes back in to fill it either in the future or anywhere in the future. Market always come back to fill it up. There's a liquidity void which market has not filled up here. We all know that market is going to come back to fill it up. Now the secret I want to tell you about liquidity void. Now 50% of a liquidity void, 50% of a liquidity void, when you take your Fibonacci from here to here, 50% of a Fibonacci, anytime you say a liquidity void, 50% is what we call consequent encroachment. Market always comes to 50% of a liquidity void and react. This one candle is a very strong impulse move. It's a very long candle. You use a Fibonacci from the high up to the candle to the low of the candle. In that is going on the buy side and buy direction of the price or a sell direction of the price. You take a Fibonacci, 50%, market always comes back there to react. You can go to your lower time frame, either a 15 minutes or a 5 minutes, look for a change of character or a shift in character but market always comes there majority of the time to react in that direction. So I hope this video has been able to help you to know how to identify a liquidity void. This is a liquidity void which market has come in to fill. I hope this video was helpful for those who are struggling to understand liquidity void, and I hope you also subscribe my channel to gain more value and more content on what I'm giving you on the channel. The channel has a lot of amazing offers to give you. You can see a lot of topics here you can actually learn from. I hope you make an impact in your trade as a beginner trader, or if you're struggling as a trader, this can actually help you. Thank you very much.